Sure. Yeah, they're interesting because we think in these situations, which have both had approaches from private equity groups, they've made indicative non-binding approaches. So in these situations, private equity groups get to look, asked to look at the books of the company, do their own due diligence without putting anything firm up, which can be great for shareholders because it can lead to a bid, or more importantly and potentially in these cases that other corporates are then running over the price matrices. We think in some heavily shorted names that the valuations that come through from the impact of shorting often attracts private equity groups that, like the valuation matrix, think that they're too cheap and that this could lead to a turnaround story that they can manage. But it also means that it forces the hand of any other corporate bidders that may have interest in synergistic values that could come through to them that clearly are not of a benefit to private equity groups. So these are two names where we don't have positions at the moment, but we are monitoring closely because they're classic situations where the value of assets to corporate groups could see a much higher bid. At the moment, it's purely on price. Clearly, we would like to enter at a lower price than it is now. We may not get that opportunity, but we would act on any news that came through that showed that there was more probability of the bid going, the non-binding bid going through at the upper price level, or interest from other corporates. So we'll monitor the news flow, monitor the turnover, and try and keep an eye on interest from other corporate groups. Yeah, I mean, we look at everything on a risk-return basis. So first thing we do is look at the downside, and clearly when there's been an approach such as these, there's a significant price move, so we see significant downside. So we always assess that, and that if the deal was to fall over, how far back to the old price would the share price go. So that's the first thing. But then it's what we find in a lot of these, particularly again the heavily shorted ones, you see that price reaction early where people have to buy shares back because they're short something that has had some action that they clearly didn't expect. So we wait for that action to get out of the way. We're seeing at the moment a lot of people entering positions, we think, because there hasn't been a lot of M&A activity, so that squeezed margins. So we're seeing some global funds come into these names at prices that we don't feel comfortable being in them at the moment. So in a lot of these situations, you will see the price not move or actually weaken despite it getting closer to maturity. The closer it is to maturity, the more certainty that we get as news flow comes out, as certain conditions are met, makes the deal much more attractive for us. So we don't mind a more certain deal and a worse price. I mean, it's more about certainty and getting capital protection and an attractive return for our unit holders. So we're happy to wait, whereas we think a few of the funds that globally have to be in situations are more aggressive at the moment.